From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we're going to discuss a unique fixed income opportunity not seen in over 30 years that could have bonds potentially producing equity-like returns in the 7 to 10% range. So to help explore this topic, I'm joined by Chad Roope, our portfolio manager. So Chad, tell us more about this opportunity.
As you recall, the Federal Reserve increased interest rates sharply and quickly, essentially from 0 to over 5% between 2021 and 2023. They did this because inflation increased rapidly to over 9% after the COVID lockdowns. This led to some of the worst bond performance in decades, with 2022 being the worst aggregate bond market performance on record. We think this has potentially created an opportunity.
Yeah, now that inflation has cooled significantly from its peak, it looks like the Federal Reserve can actually lower rates possibly by the end of the year, potentially impacting the performance of your CDs and money market accounts.
Yeah, that's right, Jim. Historically, the Fed likes to keep its federal funds rate around 1% higher than the rate of inflation. Now, with inflation around 3 to 3.5% now, and the Fed funds being around 5.5%, we think there's room for them to cut interest rates by, say, 1%. If they cut interest rates by 1% and the 10-year Treasury falls, then bond investors could potentially see strong performance since bond prices move inversely with interest rates.
Yeah, historically, when interest rates have fallen by about 1%, broad bond prices have jumped as much as 3 to 4% or more. So in addition to the investor getting the yield from the bonds, which is maybe in that 5 to 6% range, presently on the investment grade paper, they could also get this additional kicker.
Yeah, exactly right. If the Fed lowers interest rates starting in the next several months, which we expect, we think our bond strategies have the potential to deliver equity-like total returns in the 7 to 10% range you mentioned. We really think now is a good time to consider stepping out of short-term cash holdings you may have in savings accounts, CDs, money markets, these types of investments, and investing in the broader bond market.
Thanks, Chad. And also remember that if the Fed does cut rates, yield on CDs, money market accounts, and other cash equivalents will go down as well. So to help you move some of the cash out to other opportunities like the bond market, our investment committee has developed a meticulously crafted, in-depth white paper that will deliver a variety of strategies that could produce equity-like returns. If you're interested in the prospect of tapping into these strategies, reach out to us today to arrange a no-cost, no-obligation meeting. Not only will you receive a copy of the white paper, but you'll also sit down with one of our seasoned financial advisors who can determine what strategy could best fit you and your situation. Keep in mind, financial strategies aren't one size fits all. What suits your neighbor may not align with your needs. At Lineweaver Financial Group, we have a holistic approach, tailoring a plan specifically for you. If you're interested in this exclusive white paper, call us today or schedule your consultation. We're always here to help.